You're watching Silver News Daily. Subscribe for more.
That's always what people say at the highs, and a lot of times it does correct. But I think I'm looking at the very long-term chart, like 50-year chart, and yeah, we might correct like we did back after the election in the U.S. in November, but it's going to be very quick. And unless you are a professional trader trading 24/7 almost, uh, I wouldn't do it. I mean, I spoke years ago to, I think it was Bellin GP. He used to be on YouTube. And we were talking, he was talking about the gold price in Venezuelan Bolivares back in 2017 when they had their hyperinflation. And at one point, gold was still pretty steady. And then it, I think, doubled and then it corrected back down. And then it went into the millions from like 10,000 bolivars an ounce to millions. So my point here is I don't think this is the time to trade in and out of real money, out of your insurance against monetary chaos. I think we're entering it. That's the way I see it. I'm not, I mean, I buy gold as well whenever I can. Sometimes I buy it at really good levels because I happen to have the firepower when there's a correction. But the last time I bought, didn't buy that much, but gold dropped. But now it's back to where I bought it. So yeah, there's always going to be people who don't follow gold, especially like technical analysts and people who don't understand that gold is actually a really important insurance, especially in these times, Elijah. I think the total amount of debt in the world now has reached 325 trillion. So the central banks and the governments, they're desperate. They're going to keep printing. That's the other thing that the price of gold is telling me. So yeah, I mean, you could try to wait, but you might miss the boat.
What if I told you that the next financial meltdown won't come from tech stocks or housing, but from silver? Right now, beneath the surface of the market, something massive is brewing. Silver is creeping toward 13-year highs, but no one's paying attention. The headlines are focused on gold, on interest rates, on inflation, but the real powder keg is sitting quietly in the silver market, and when it explodes, it won't be quiet for long. Behind closed doors, billionaires are dumping paper, silver, quietly exiting positions that the average investor still believes are safe. Meanwhile, physical silver is being snapped up by funds and institutions like it's going out of style. Trade wars are back, inflation is spiraling, and central banks are stuck. Add to that a market structure overloaded with short positions, and what you get is the perfect recipe for a short squeeze that could make 2021 look like a dress rehearsal. And here's the kicker. This isn't just about silver. This is about the entire banking system. Because if the short squeeze hits at the wrong time, it won't just blow up a few hedge funds. It could shatter confidence in the paper markets, reveal the flaws in the COMEX system, and force the world to confront something it's been avoiding for decades: the true value of silver in an unstable world. So how did we get here? Why is silver being ignored while the storm clouds are forming? And why are the people who claim to be helping the market actually hurting it? Stick around, because this rabbit hole goes a lot deeper than you think.
Right. I thought it was going to take a while to make a foothold or a base at 3,000, but here we are at 3,100. As for silver, though, I'm still really positive. I think people need to be patient. I remember silver squeeze one back in end of January, beginning of February 2021. Everyone was really excited, but I did like a panel and I said I wouldn't get my hopes up because the bankers are going to throw everything at it. But I think things are really different now, Elijah. The bankers are running out of ammunition, and by that I mean physical. And technically, we are at levels we haven't seen in about 12, 13 years, the silver price. We closed last week at a 13-year high on a weekly basis. So I think it's just a matter of time. And I know we've been saying that for a while, but don't forget, in the 1970s, silver didn't really do much up until like 1979, late 78, 79. I mean, it was pretty flatlining from the mid 70s until then. And I'm sure a lot of people probably gave up. And then silver went on to break $7 and go to almost 50. So, yeah, it is frustrating. But as I've said many times, uh, but unfortunately, a lot of people don't seem to. They seem to want the convenience of buying it through a broker or an ETF. And I mean, I think silver squeezes any day you can buy physical. And that's what I usually do, Elijah, buy as much as I can.
Silver isn't just lagging behind gold. It's doing so in a way that's raising serious red flags for anyone paying attention. Over the last year, gold has soared 36%, catching the spotlight as inflation and geopolitical chaos shake investor confidence. But silver? It's only up 27%. Now, that might sound impressive on paper until you realize that in moments like these, silver traditionally outperforms gold, often dramatically. So, why isn't it? Ross Norman captured this perfectly when he described silver as the reluctant passenger on a runaway train. It should be leading the charge, yet instead, it's dragging its feet. And the reason isn't lack of fundamentals. Silver demand just hit 1.21 billion ounces, the second highest ever. Industrial usage is exploding. Physical buying is strong. But the price action? It doesn't match up. Why? Because silver is suffering from something deeper. Reputation damage. The endless claims of price suppression, manipulation, and imminent parabolic rallies have turned silver into a punchline among mainstream investors. Gold gets the respect. Silver gets the conspiracies. And even though some of those claims may have had merit in the past, today they're doing more harm than good. They're scaring away new investors, creating an echo chamber, and worst of all, they're making silver look broken. When the people shouting about silver the loudest are also the ones distorting how it works, it's no wonder silver remains friendless, even in one of the most bullish environments it's seen in years. But here's the twist. This isn't just a perception problem. It's a setup. Because while retail sits on the sidelines, something much more calculated is happening behind the scenes.
No real news, but I've seen someone post recently. I don't remember who it was, but if you look back when gold made its big runs like 79 to 1980, there's a huge crisis then, a recession. Paul Volcker had to let rates go to 15%. So it was forecasting some trouble ahead. For some reason, gold does that. And back in the 2000s, yes, gold was in a bull market from '02 to like 2011, but it really started picking up like in 2007 all the way to March 2008 when we topped at 1,000, and then we had the subprime crisis, and then we had a big move up in 2011, and that forecast the European sovereign debt crisis. So I think what's going on now, there's so much out there that is how can I say, pointing, well, there's some indicators that are worrying, like the Japanese government bond market, the yields there are going up very quickly. The Japanese yen is strengthening. US Treasury yields are still really sticky. They're not really going down as much as people expect them to. What else? The stock market seems to have topped. We're down on all the three indices year to date. So yeah, I mean, as for today, it's just a continuation of what we've been seeing. So yeah, I think gold is pointing to trouble ahead, but it could also be pointing to something that I've been like warning about for years since I started this channel, and that's hyperinflation. And I think it could happen, yeah, very quickly. And hyperinflation is not really anything to do with cost push inflation. It's more to do with confidence in the currency. And we have to admit, I think, that confidence in the political and the leaders, central bankers of the West is at rock bottom, I would say. Maybe not in the US, but it's still very divided. Here in Europe, they're using lawfare like they tried on Trump, and they've banned the Romanian guy who won the first round last year, presidential election. They've just banned Martin Le Pen. Is it Martine? Or yeah, Le Pen from running for president in 2027. She will appeal, but it all seems to be falling apart. The social economic, political environment. And when that happens, Elijah, trust in the currency evaporates because the currency is issued by the establishments. So people might want to trade gold, but I'm going to hold on to it because I don't want to trade gold for collapsing fiat currencies. And that includes the dollar, the euro, the pound, all of them.
To understand why silver remains trapped in this strange limbo, we need to go deeper into the actual mechanics of how the silver market functions. The crowd screaming manipulation often paints a picture of shadowy banks smashing prices with reckless abandon. But that version of the story doesn't just fall apart under scrutiny. It actively hides the real vulnerabilities in the system. Here's the truth. The big banks, they're not just short silver. They're also long physical. They hedge. They arbitrage. They balance books across time frames. When a bank goes short in the futures market, it's usually to offset physical holdings or fulfill lending and leasing obligations for miners, refiners, or industrial clients. The futures short is the hedge, the insurance, not the bet. At any given time, the bank's exposure is close to neutral, save for the timing mismatch between the trades. This isn't nefarious. It's normal. It's how liquidity is provided. And yet that nuance is conveniently ignored. Why? Because the simplified version, that banks are evil manipulators, is easier to sell. It rallies emotion. It drives clicks. And it gives people someone to blame. But the irony here is brutal. The people most vocal about silver being suppressed by bad actors are often the ones driving new investors away from the market. When you frame silver as broken, manipulated, or uninvestable, guess what happens? Institutions walk. Retail loses interest. And the very breakout everyone claims to want gets delayed. Again, the mechanics of the market aren't the problem. The narrative is. And while the noise grows louder, some of the sharpest players in the game are taking advantage, accumulating quietly, while the rest of the world debates whether the game is even fair.
I don't have like a schedule. As long as I have extra balance on my bank account, I'll go and buy some coins or bars. But I've noticed, don't know if you've heard, there's a billionaire that I hadn't heard of, David Bateman. I think he founded an IT company that's into the real estate market. I think he's from Utah. And he's recently bought 12.6 million ounces of silver from COMEX, and he withdrew that from the exchange. There's a difference between taking delivery and withdrawing. And he posted, I think today on X, that the silver he bought represents 1.5% of the annual silver supply. So it goes to show that silver is a really tiny market when uh, albeit a billionaire, I admit, but 2,500 contracts, I think, on COMEX. And I I think it's just the beginning. I think Silver Squeeze 2.0 helps, I think, to maybe get people aware of what's going on. So, and as for gold, I think it looks really explosive, and I've been saying, I know it's hard to forecast things, but looking at the very long-term chart of gold going back 50 years, it really looks like we've broken out. I had the target last year of 2,700 because that's where this trend line came in, and we broke through there. And then after the election, we broke back down below it, but quickly came up, and now it's really flying. And I do expect silver to join soon.
While the retail crowd argues over memes and manipulation, the billionaires are making moves, but not the kind you'd expect. They're not loading up on paper silver. In fact, they're dumping it. Quietly, methodically, and without a press release in sight. ETFs like SLV, COMEX contracts, those positions are being scaled back. Why? Because the big money doesn't trust paper anymore. Not in this environment. Instead, they're turning to physical, vaulted silver, PSLV, direct bullion allocations. Anything that can't be diluted, frozen, or defaulted on in a crisis. Because here's what they know. If a real short squeeze hits, the paper market is the first to break, and the last to deliver. And the cracks are already showing. Look no further than Digital Commodities Capital Corporation. They just bought 10,000 units of PSLV, a move that barely made headlines but sent a loud signal to anyone paying attention. This isn't a hedge, it's a statement. They're positioning for something big, something that requires holding the real thing, not a promise of future delivery. And it's not just them. Across the board, we're seeing a strategic retreat from synthetic exposure. Family offices, high net worth individuals, and forward-looking institutions are stepping off the paper train and into the vault. Not because they think silver will go up a little, but because they think something's coming that will make access to real metal critical. And here's the kicker. While the mainstream media talks about inflation in abstract terms, the people who actually move markets are betting on its real-world impact. They're preparing for a future where silver isn't just a trade, it's protection. And they're doing it before the rest of the market wakes up.
Ideally, we should hold everything in our possession, but it's not always that easy because of security reasons. But the next best thing is private vaults that are reputable and that are not involved in the banking system. And as for ETFs, I'm sure PSLV is legitimate because I trust Eric Sprott, even though he's not involved anymore. But the problem there is that people, and probably the bullion banks, they've been borrowing the shares to short it to keep the net inflow at zero. So if they hadn't shorted all these PSLV shares, the trust would have to buy physical gold. But let's say the public buys a million shares one day, they have to go out and get the physical silver. But if you have the shorts coming and selling a million, then they don't have to buy the physical gold. And I think, yeah, they're desperate to keep that like that. But I mean, if there's justice in the world, and I guess that's a general statement, this should end in tears for the bankers because it's not real, what they're doing in silver, and I think they're gonna have a really tough time keeping this huge short position in paper silver. And why do I say that? Well, because there's so many things that could go wrong out there economically, monetarily, geopolitically, especially with what is going on vis-a-vis Iran. We could see some kind of conflict there, and the price of oil would quickly go to like 150, and that would put a rocket up all commodities, I would say.
You can feel it in the air. Silver squeezes back. But this time, it's different. It's not just Reddit threads and viral hashtags. This time, it's institutional. It's intentional. And it's starting to bleed into the real world. Digital Commodities didn't just buy PSLV to make a point. They're laying the groundwork for something bigger. They're in talks with mints to launch their own branded bullion products. That's not a trade. That's a campaign. And that's what makes this resurgence so dangerous for the system. Because now it's not just meme investors yelling online. It's companies building physical supply chains, forging products, engaging in the culture, and anchoring silver demand in something tangible. When you combine that with growing distrust in fiat currencies, banking systems, and digital ledgers, you begin to see the outlines of a movement that's not just about price, but principle. March 31st was dubbed Buy Silver Day, and it wasn't a gimmick. It marked a turning point in sentiment, where retail and institutions alike are starting to align. For the first time in years, the energy around silver isn't just reactive, it's proactive. It's coordinated. It's becoming a brand, a story, a counter-movement to a financial system that's seen as bloated, rigged, and ready to snap. And the fuel for this fire? It's already here. Demand for silver has surged past 1.2 billion ounces. Mine supply can't keep up. The deficit is real, and it's growing. Every new ounce sucked into a vault by a company like Digital Commodities tightens the noose around the futures market. And when enough people start doing the same, draining available supply, questioning delivery mechanisms, and refusing to play by Wall Street's rules, you don't just get volatility. You get an explosion. The question now is, how much pressure can the system take before it buckles? Because we're not just watching another silver rally. We're watching the early stages of something that could rip through the financial establishment like a wrecking ball.
Like a delay of like a month to 2 months in delivering gold. Yeah, so when they come out and say, oh, you guys are crazy, these massive shorts are covered because we're long in the LBMA, but they're not really long physical, and that's the problem. But eventually it will come out. People are waking up to it, and I think Eric Young, aka King Kong 9888, he's done a really good job of explaining how they use the EFP mechanism to execute this scam of pretending that paper is physical. And EFP stands for exchange for physical, but it's all settled cash. So basically, the LBMA is like a bucket shop. There are kinds of brokerages in the early 1900s where you could bet on the price. You weren't buying any stocks or selling any stocks, and I think that's what the LBMA is. COMEX, to some extent, is also a bucket shop, but it's not as leveraged as the LBMA because there's no regulation. The LBMA, the banks that trade in London, they're not regulated by the Bank of England. They're like self-regulated, so they leverage many, many times over, while COMEX in the US, the leverage is less. It's about, I don't know, COMEX, you have to put 10% down, so it's not as much as leveraged.
The pressure isn't just coming from within the silver market. It's being amplified by the chaos outside it. Inflation isn't going away. It's mutating. The latest data has even the Fed second-guessing its next move, with Mary Daly openly admitting she's losing confidence in the rate cut projections. That uncertainty? It's a spark, and silver thrives in the fire. Layer on top of that the escalating trade wars. Tariffs are back on the table, and global markets are reacting with panic. The dollar wobbles, equities teeter, and safe haven demand is suddenly back in vogue. Silver just pushed above $34.30, closing in on a 13-year high. Not because it's trending, but because the world is trembling. And when that happens, silver doesn't need a reason. It becomes the reason. But here's the nuance. Silver isn't just a hedge against inflation. It's also an industrial metal. And that dual identity means that when inflation hits alongside economic instability, silver gets pulled from both sides. Industrial users panic buy to secure supply, investors rush in to preserve value, and the supply, it doesn't magically expand. It contracts. That's where the real risk lies. In a world where inflation is no longer transitory, where governments are openly weaponizing currencies, and where geopolitical tensions threaten global trade, silver stands alone as both a defensive shield and a strategic asset. The more uncertainty grows, the more silver becomes the answer, and the less of it there is to go around. And just like that, you have a self-reinforcing cycle. Inflation rises, demand spikes, supply tightens, price rises, more demand follows. And all the while, the banking system, loaded with paper claims and short futures, edges closer to the cliff. Because if silver keeps rising under these conditions, the next move won't be gradual. It'll be violent. It'll be global. And it could start with a single misstep from a market that's already on edge.
I was looking past weekend I think on the live stream with Clive, and silver actually up until Friday, year to date, is outperforming gold by 1% or 2. So I think the reason people are frustrated is because gold is making all-time highs, like there's no tomorrow, and silver is still stuck here in the mid 30s or so, and the all-time high is 50. But as I said, patience I think is needed, and stop buying ETFs, buy the physical, and there's no excuse. In my opinion, I've never bought a silver ETF, and if you remember, I mean, I've spoken in the past about how all the gold prices in different currencies have been going up, and how the Japanese yen has been leading this race down to zero. But we're also seeing now that in other currencies, silver is actually trading to new all-time highs, like with the Canadian dollar, with the Aussie dollar, they're trading like above 50. So I think yeah, that's what's going to happen. And I think the fundamentals for silver are still really good. 5 years of deficit in the silver market, i.e., there's more demand than silver that's produced or recycled. And we're seeing not just a lot of gold flow to the US in the last few months, like over 2,000 tons, but a lot of silver also is flowing. And who's to say that another billionaire or another two or three is not going to emulate David Bateman? I think is very possible. And yeah, I think the bullion banks are. Yeah, they're trying desperately, and I'm sure they keep track of the the gold and silver bugs and the silver squeeze, and I'm sure they've done their darndest today to keep the paper price down on silver squeeze, but I think it's just delaying the inevitable. Yeah, eventually things like that are not sustainable, they fail, and when people want their physical.
Zoom in on the hedge funds, and you'll see the groundwork for short squeeze 2.0 already being laid. They've been quietly repositioning, liquidating long exposure, trimming risk, waiting for the dollar to bounce. But here's the catch. Their paper pullback hasn't been met with fresh shorts. That's not confidence. That's fear. They're lightening up, not doubling down. Why? Because they know what's coming. When silver briefly corrected, it wasn't bears rushing in. It was bulls backing off. And that's telling. In normal conditions, aggressive shorting would chase the price lower. But this time, it didn't happen. The appetite to go short just isn't there. Not when the fundamentals are this tight. Not when physical premiums are rising. And not when the threat of another retail uprising hangs over the market like a loaded gun. And let's be clear, the setup now is far more explosive than it was in 2021. Back then, it was mostly retail buzz. Today, it's structural. We have a global supply deficit. We have massive physical buying from institutions. We have rising industrial demand. And we have hedge funds, many of whom were on the wrong side of silver before, now tiptoeing through the market, terrified to get caught again. The system is stretched thin. COMEX inventories are vulnerable. Backwardation is lurking. And the moment a serious bid hits the futures market, or a major player demands physical delivery and size, the dominoes could fall fast. That's the danger of a short squeeze in a market this fragile. It doesn't unfold slowly, it detonates. And if that detonation happens while inflation's surging, trust is collapsing, and physical demand is spiking, you don't just get a price spike. You get a structural reset. The kind of event that redefines what silver is worth and who gets left holding the bag.
It's very destabilizing socially and economically. I mean, I think my wife was telling me that she watches Colonel McGregor on YouTube, Colonel Douglas, is it Douglas McGregor? And he was saying that he expects maybe a civil war in the UK. I'm not too sure we will get that, but in France it's definitely possible. So whenever there's political like uncertainty and chaos, yeah, the currency doesn't do well. When the Soviet Union collapsed and Eastern Europe as well, all the communist regimes collapsed in the 90s. There was massive hyperinflation in many countries. Yeah, because if you don't trust the people who issue the currency, yeah, you're not going to trust the currency either. And I think that's what's happening in the US. The verdict is still out, I think. I think President Trump is doing some things that are good. But at the same time, he, for example, they passed this continuing resolution. And Congressman Thomas Massey from Kentucky noted that he just passed the Joe Biden's continuing resolution, and that the deficits are going to keep increasing quite substantially, like around 300 billion a year this year, next year, and the year after. So, and there's a lot of division in the U.S. still. I know the people who support Donald Trump are very happy, but almost half of the rest of the country isn't. So that's still a problem there too, I think.
Everything we've laid out, the suppressed price action, the flight from paper, the physical accumulation, the return of the silver squeeze, the inflationary storm, and the hedge fund retreat, it all points to one thing. This isn't speculation. It's set up. Silver's march to $100 isn't just plausible, it's mathematically logical when you follow the trail. The market is cornered. Supply deficits are real. Institutional interest is growing. And the fear that's kept investors away, that's starting to flip. Silver isn't the joke asset anymore. It's becoming the insurance policy, the escape hatch, the hard asset for a soft currency world on the brink. If that short squeeze hits now under these conditions, we're not talking about a 10% rally. We're talking about a financial event, one that forces banks to scramble, futures markets to freeze, and prices to reprice in real time. That's the potential we're staring at. And the smart money, they're not waiting around to see it confirmed. So whether it happens next week, next month, or next year, the fuse is lit. And when silver moves, it moves fast. $100 isn't a dream. It's the result of years of imbalance finally snapping back into place. Make sure you're watching closely, because this story is still unfolding. And if you want to stay ahead of what could be the most violent shift in silver we've ever seen, don't forget to subscribe, stay alert, and prepare accordingly. This is not financial advice. Speak to a professional before making any financial decisions.